morning, Zack, Linder, and the Zack Pack, powered by Coldwell Banker. I'm here with a very special guest today. It is my friend Fargo Camerlengo. He is actually a loan officer with Guaranteed Rate Affinity. He's with my partner Linder, Libby. He specializes more in like renovation loans, things along those lines, but he can do the whole gambit. So I'm going to turn it over to Fargo here for a second. He's going to tell us a little bit about himself, tell us a little about where you're from, how long you've been doing this, all that good stuff, Fargo.
Yeah, well, first of all, thanks, Zach, for having me. You mentioned Libby. Libby's an amazing person, so I'm extremely blessed to work with her. Who am I? That's a great question. Really, I'm just a human helping other humans.
Sure.
I've been in the mortgage industry for 4 years now. Previously was in personal finance for 2 years. I just really love helping individuals. Coach baseball on the side, big sports guy, so I love all things sports, NFL, MLB, a little bit of NBA. Big NHL guy. I love my Pittsburgh Penguins.
Yeah.
If you follow any of my social medias, you'll see my videos. And in the background, I got all the sports memorabilia.
Definitely.
But I'm just a normal man.
Yeah.
Just trying to help people.
Have you always been here in the Columbus area?
In the way that I can. So that's an interesting story, actually. I was born in Delaware, Ohio, which is about 30 minutes north of where we're at right now in downtown Columbus. And when I was 2, my parents got divorced and we moved to West Virginia. Okay. So I grew up in West Virginia, went to college in North Carolina, then moved to Arizona, and then I completed the circle of life. And I now moved back to Delaware, Ohio. So that's where I currently live for the past 7 months now. I just bought a home in Delaware.
It's funny how you can really do that full circle. And like you really didn't have too many ties here, like that you remember anything, but then just you feel that drawback. But this is the right place to be, man. I think Columbus is a city on the rise there. So.
I love Columbus so far. It's really been a great city for us. So I grew up in West Virginia, but really we were 30 minutes outside of Pittsburgh. Okay. So all of the things that we did were kind of in Pittsburgh. And they're very comparable, blue-collar, hardworking individuals. But I really love the nesting pot that this is, the melting pot that Columbus is. There's so many different people from so many different walks of life, and you really get to meet a lot of unique individuals.
No, that's absolutely true. And that's what I love most about here, too. That's one of the reasons I came from Florida there. So let's jump into more of the mortgage side of things. And let's start with some basic questions. And I get this one a lot. And a lot of people don't know the difference. What is the difference between a mortgage broker and then a bank?
Okay, yeah. So a mortgage broker is basically a middleman who's going to connect individuals with banks or correspondent lenders, whereas a bank is a financial institute that provides their own products and give loans directly to consumers.
Gotcha. And then so in terms of the loan itself, how can I find out like how much of a loan I qualify for?
Yeah, so as a mortgage professional, I would tell you to speak with a professional.
Sure.
But if you wanted to start getting on your own, one thing that I would suggest is really assess your financial situation. So that's going to include factors as your income, make sure that you have good stable income. You're going to want to check your credit score, employment history, and your existing debts, and kind of just get a picture of your whole financial situation.
Gotcha. So I guess you kind of touched on this a little. It's like what specific steps should I be taking before getting pre-approved? Now you mentioned like worrying about my credit, all that good stuff. Is there like specific 1, 2, 3 steps I should take?
So I don't know if I could give you 1, 2, 3. What I would start with is initially look at your credit report, make sure that it's accurate. Make sure that there's not stuff on there that you don't think should be on there. Make sure that all of the debts on there are yours. And then the next step would be I would gather pay stubs, bank statements, and tax returns. And then once you have all of that together, start talking to different lenders. Because a lot of different lenders, they all can provide the same products. But really you want to find somebody that you feel comfortable with and that you trust.
Should I start looking at houses before I talk to you?
Absolutely not. No. Absolutely not. Because as they say, you don't want to fall in love with something that you can't afford. I would definitely talk with a financial advisor. Number one, really is where you should really start is a financial advisor. Let him get a full picture of your finances and then talk to a mortgage lender and say, here's what I'm thinking, here are my goals, and then let them do the work from there.
No, that's smart. I think a lot of people skip that financial advisor piece. And like the house is one of your most important investments, but it's like of a large pool of a basket of investments you should be making. So
exactly.
That's great advice. I like that. So one of the questions I get a lot as well is like you see like an advertised interest rate and then they'll hide in like an APR. What is the difference between those two things?
Yeah, so an interest rate is going to be what they are charging you monthly to hold that loan, whereas an APR is going to be the interest rate plus any fees that are financed into the loan. So there's going to be like closing costs. Sometimes they're financed into the loan. So it's that interest rate plus those finance costs.
Okay. Sometimes those fees can be pretty significant.
Yeah, and you'll notice like if you're paying for discount points,
sure,
that could be something that's in there. Just really any fee that's associated with getting a mortgage.
Okay, and I guess it wasn't one of our original questions we were talking about, but do you mind telling me a little bit about discount points and what those are exactly?
Yeah, so discount points is basically prepaid interest.
Okay.
So you're going to pay a lump sum up front to get a lower interest rate. Sometimes it's good, sometimes it's bad. You really need to assess how much you're going to save per month,
sure,
how long it's going to take you to get to that initial investment, and find your return on investment.
Gotcha.
Right? So if you're going to pay $4,000 for discount points and it's going to take you 8 years between your monthly savings to get to that $4,000, I wouldn't do it because the average person lives in a home for 5 to 7 years. Probably doesn't make much sense. Now, if you can pay $2,000 and it's going to save you $40 a month, and however, if it makes sense to where you're going to get a return on your investment within 2 to 3 years, maybe it makes sense.
Gotcha. And then, so should I be saving money for this and a down payment then, or is it just worry about a down payment, you think?
Really, I would just try to save as much money as possible.
Okay.
The down payments vary from anywhere from 3.5% to 20%. Typically, I would advise my customers to do what's right for you and in your unique situation, because I talk to all of my customers and all of them have different goals. And that's something to keep in mind is, what is your goal? And that can determine whether the fact that you're going to put 3.5% down or 20%.
Sure.
I actually just had a conversation with a friend from college who he's been kind of picking my brain a little bit. He's thinking about buying his first home. He has a girlfriend that he's getting kind of serious with.
Yeah.
But he wants to kind of set himself up financial freedom.
Sure.
So we talked about maybe buying a 3 to 4 unit now with 3.5% down. Build your portfolio. You have 4 units, and then in 3 to 4 years, you can then rent out all 4 units and then move into a single family, put 20% down in the suburbs kind of thing.
More of your dream home.
More of your dream home, right. And I just did a video on this the other day. You got to start somewhere.
Yes.
And I think that's a big important step that people miss. They just want to buy these nice, luxurious homes, but if you talk to people who have these homes, they didn't start there, right? Nobody comes out of the gate fresh out of college or fresh into the working industry and buys a $400,000, $500,000, $600,000 house. They start with a maybe $150,000 to $300,000 home, build some equity, sell it, refinance it,
just work their way up.
And just work their way up. Yeah,
that's smart. And I love the suggestion with buying like multi-unit properties. A lot of these people get these starter houses, and they appreciate. But if you can cash flow them while you live there and basically pay your mortgage, have someone else pay your mortgage.
That's the key. Yeah. That's the key, man. If you can really set yourself up for 10 years down the road, and you can have 8 to 10 doors paying you consistently each month. That's financial freedom, in my opinion.
No,
right?
I agree 100%. That's the path I'm on personally. I think you are as well. So good stuff.
I diverged a little bit. I think I let my girlfriend talk me out of it. I bought the single family first, but
that's right,
our next home is definitely going to be a 4 unit,
Yeah.
And we'll probably live in there for about a year and then go back into a single family.
That makes sense. And I think this is actually a good transition question then. So looking at all those different products there, what is the main difference between a standard mortgage and then a renovation loan, which is what we're about to start talking about?
Yeah, so a standard mortgage is going to allow you to purchase a piece of property.
Okay.
Whereas a renovation loan is going to allow you to purchase a piece of property, but also finance the cost of renovations into one single mortgage.
Okay.
So they're very similar. However, you're going to be able to finance the cost of renovating a home into the mortgage.
Gotcha. Thanks for making it through the video. Zack Linder here from Zack Linder and the Zack Pack, powered by Coldwell Banker. Make sure to like, comment, and subscribe. It does support our channel. We really appreciate it. And check out one of these other videos while you're here. Have a great day.